Markets are finally having a day where they seem to be ripping higher. Gets me rather excited. I'm happy to see that. Does that mean it's too late to be buying into it? Stick around for today's video and I'll get into that.
Want to make your money work harder? Enjoy another video with Adam Kahn, the rational investor on stocks, real estate, and crypto. Subscribe now for your weekly dose of investment insights and hopefully learn a thing or two.
Hello, my YouTube friends, and happy Monday. Nice to see the market kind of ripping higher. On my walk, I hope you're all good with that. Tight day today, so I need to get my exercise in. Hopefully there's not too much glare and too much of a pain for you guys. But I still wanted to chat, do a video, want to try to stick with them. Probably have to take you on my walks a little more often. So, is it still a good opportunity to buy? Are there still bargains out there? What do I see in the market if you guys are curious? Well, yes, there's still bargains out there. No, it is not too late to buy. When it feels like the market has made a bottom, which hopefully it has, it means there's still opportunity to buy all the way up. And it really depends on your time frame and what your goals are. Now, before I get into it, before I go any further, as always, this is not financial advice. Please don't listen to me. Reach out to your financial advisors to make any financial decisions you guys make. As you know, I'm just some guy on YouTube sharing my experiences and what works for me. And I don't know if that necessarily means it works for you. But after a ton of pain the past few weeks, where the markets kept reeling backwards, it does seem to feel like they're getting some legs beneath them and the selling pressure is subsiding. It's really nice to see Boeing, which I pounded on the table about for a few years, feeling like maybe it's getting to the point where it can continue up. They've gotten some new contracts in, which means over the next, I don't know, 2 to 3 quarters, not immediately, it'll take time. We'll start seeing that coming through on the earnings, which should help to give a solid base to the stock. Where else do I see bargains? I think Target is so oversold right now. To me, it's one of the best deals out there. If you can buy Target for under $110 a share, with 12 times, I think, current PE, that just seems outrageously inexpensive. You're also getting a dividend, and everybody loves to hate that. There's still talk about wokeness and boycotts, and nobody goes to Target. Well, somebody goes because their earnings are decent and they continue to grow at a decent pace. In fact, when I compare Target to Walmart, Target looks way more attractive to me at their current prices, just based on the PE ratios, their growth rates, dividends, how much cash flow they're using to make those payments. It just seems like a better opportunity to me. Again, not financial advice. Target kind of feels to me like Boeing did a year ago or whatever the time frame was. Everybody hates it. I feel like I'm banging on the table, kind of being like, hey, pay attention here. Nobody, like, there's certain people who watch it, the dividend guys, because they start to notice. But it just seems like a value that's probably going to take a long time to turn around. But they make a good profit. And the tariffs have scared people to oversell it. I feel the same way with Best Buy and some of the other retailers, that the tariffs have made everybody a little overly nervous. And whether they go into play or not, I think it gives a lot of room for these stocks to reverse and start going back up pretty much no matter what happens with the tariffs. I think the fear that that's brought on the market is what's given the good buying opportunity. The other one that I've talked about a whole bunch is Whirlpool, which pays an obscenely large dividend, and I don't want to be overly attracted to that because maybe they're using too much of the cash flow and they run into a position where they have to cut it. But I think Whirlpool's another company that they got a lot of brands under their name and they're going to be just fine in the long run. At least that's my thoughts. sometimes things change, can get to a point where it's not going to be great in the long run. But I think Whirlpool will be around for a while. Now, both Target and Whirlpool are not stocks that I would be trading. Same with something like Polaris. But there's something that I'd put in an account and just leave it and not really pay attention to and hope that they outperform the market. If you're looking for trades, at least my thought is I think the stocks are going to be making new highs in the next 6 months, the overall market. And if I'm correct on that, for trades, I want the things that have been performing previously, which is why my account is Netflix, nvda, Amazon, Google, and Meta. I think the things that were making highs and pushing the markets previously, unless there's an economic slowdown, will still be the things that continue to push it forward. Netflix is the only one that I really added as new. Nvidia, sort of, because I've been in and out of the stock a few times because it's been in a range from what I've seen between, a little below $110 a share, and it then tends to get up to above about $140 a share. And it's done that a few times, creating some opportunity to trade the range. I'm a little longer than I should be in some respects because if it gets back up to that $140 range as a trade, I'll be happy to lighten up and create potential opportunity if it falls back down. But I gotta tell you, there was enough panic this time that I feel like if these things start pushing back up towards their highs again, I think they could get through this time. Uh, I think despite all the complaining, all the economy hate, all the inflation discussion, the debts that people have, personal, as well as the debts that our country has, that the economy is actually doing okay. It's interesting to me that the stocks have been rallying at the same time that the bonds are selling off and interest rates are going higher. At least that's what's been the trend the past week or so, which would be really interesting to see if bonds rates, not prices, actually go higher again, pushing mortgage rates back up and stocks go higher at the same time. What I've noticed in real estate here in Las Vegas is prices are beginning to go up again. So I wouldn't be surprised to see the rates go higher and the prices slow down a bit. The Fed made a big announcement in terms of how they're running off their balance sheet, that they're probably going to stop selling some of it, which would have stopped some of that downward pressure and higher rates, you'd think. But it's interesting after they've made that announcement how the opposite has actually started happening. I also find it kind of fascinating that we're headed towards April 2nd when the tariffs may or may not go into place and the market's getting pretty strong. It tells me the sell-off is probably a little over exaggerated, which is why I'm getting super bullish the market. And now most people who pay attention intraday or week to week, and even potentially people who got, well, I guess quarterly reports haven't come out yet, but I think people who pay attention got shaken out. The nervous money has probably moved on. And in terms of short-term trading, I think the supply and demand and nervousness and overexcitement is what you want to be looking for. And people started talking about recession. The market had corrected enough, but not much had really changed from before. GDP seems to be slowing down a bit, which is what was wanted. But I think you have to pay attention to the fact that the big companies were buying a lot of things in advance of tariffs they thought might be coming on, which is going to make GDP look higher than it really is. And if they don't need to continue doing that, GDP will look like it's slowing down because they've already bought everything they needed. So they're not going to buy quite as much at this point. So the numbers may show like it's slowing, when in reality, it may just be chugging along exactly how it has been. And I don't know if you guys caught my videos yesterday, one about why I hate TSLY so much, and the other one talking about the housing market. But the housing market one in particular, even though I think both of them are really good videos, I think does a good job of explaining why I don't really see a big collapse this time like we had in 2008, and why I think it just continues higher. You have lots of people, probably in the millions, but I'd have to look up the data to see how many it actually is. I don't want to spout something out like fact if I don't do the research in advance, are probably in mortgages under 4%, and some of them even under 3%. Why would they move? Even if they have a home that isn't quite their dream home and they think they want to move out of it, I just don't see a reason that they'd sell that home unless they ran into real financial hardships. At least me, I would be more tempted to rent out the property than sell it, just because we got in it such a good deal that I don't really see that ever happening again. And the only way I do see it happening is if we have a major recession. I just don't see the mortgage rates getting back down to 3% anytime soon. And I think we're going to actually stay in a range for a long time. And if the inflation sticks, you could see higher mortgage rates. I don't know. I don't really try to predict on that. When I do mortgages, I'm definitely not that guy who says, get into a mortgage now because you can just refinance when rates are lower, because I don't know that they're going lower. And I think giving people that hope is setting them up for potential problems in the future if that doesn't happen. I'd rather prepare somebody that the rates are where they are and make sure that you can afford your payment currently and you're comfortable with it. And that, sure, if they go down, maybe you can lower your payment. But I wouldn't get into a mortgage with this expectation that you'll be able to refinance at lower rates. Markets are markets. And as much as I have my ideas of what I think will happen, you really just never know. And anything can change to impact it and surprise people as well. The other thing is, I'd want to make sure that somebody is comfortable where the payments are, especially because over time, property taxes and homeowners insurance tends to go higher. So if you're stretching too thin currently and rates don't go down and your taxes and your home insurance goes up and you don't end up getting a raise or taking on a second job to stay ahead of things, it could just get really tight. And I don't want to see anybody in a position where it's called being house poor, where even if they can make the payments, it's such a stress that they aren't comfortable going out to dinner or whatever it was that they liked to do previously. Boy, I hope you guys can see me. The glare from what I'm looking at looks terrible. And I know the sun's behind me. Anyway, the reason that my message is so consistently bullish or buying, no matter what's going on, has to do with a quote that I said a few videos back, maybe a month or so, that half of something is better than 100% of nothing. And what I mean by that is, I'd rather buy into the market today and have overpaid to watch the market fall in half than not buy at all because I keep waiting for this big correction. You aren't going to find yourself in a position where the market just collapses, all the signs come together telling you this is the perfect time to buy. Unfortunately, it just doesn't work like that. If you look at a long-term chart of the Dow or the S&P 500 or the NASDAQ, and you look at the spots that on a chart look so obvious that, man, you should just buy there, there, and there, what you're going to be looking at is the dot-com bubble. You're going to be looking at the 2008 financial crisis. You might even go back to the 1987 crash. And you may even go back to the Great Depression and think, man, it was so obvious. But the problem is, when you look at the times when the markets are at the bottom, there was legitimately scary stuff going on that made it look like it would just keep going lower. And same with the tops. When you look at the tops of the markets, it's because everything in the data looked really good and it looked like things were just awesome. So I try not to time, especially my set it and forget it stuff, to what I think is going to happen over the next 6 months or even the next year or two. Set it and forget it stocks primarily are the companies that I just think are the best companies, that I think will be able to mitigate any economy, and I hope in down markets they don't fall quite as far, and that on up markets they go up faster than other companies. You know, if I'm going to be in food space, I want to own things like McDonald's and Starbucks. And sure, I've talked about Portillo's and I own some of them, and maybe I get lucky and that becomes something that goes way up a whole bunch over a few years. And McDonald's won't, and neither would Starbucks. But I have much more confidence that no matter what the economy does and no matter what gets thrown at them, they'll survive and they'll continue to grow over years and years and years. Trading is completely different. You know, if you're looking at short-term moves, you better be watching the markets all the time and trying to get a good feel for where things make bottoms and potentially where they even make tops too, or that they get stuck in a range, which creates great opportunity when they're stuck in a range. So one of the viewers made a comment in the chat who I really like. We kind of say hello back and forth often enough. And I find he's super polite and has good wisdom about a friend of his who was going through a tough time, also noting a wife passing away and some other stuff that reminds me how not important a lot of this stuff is, and that what is important is making memories with family and friends and making sure you do the things that you enjoy for your life too. You know, don't get me wrong, I enjoy investing. I enjoy making my best guess for the markets. But more importantly is connecting with people and making sure that you get out and you see the world and you do some things that, you know, whatever it is you're into. For me, it's travel. We just got back from Mexico City, and I'm already looking forward to the summer where we're going to do a nice big trip to Asia again. I'm watching my son get older and older, and the time goes by so quick. And the person who made the comment is 100% accurate that you don't know what curveball's going to come. So you better do that stuff too. If there are goals in your life that you're hoping to achieve and things that you want to do, you know, I guess even stop watching guys like me on YouTube and push as hard as you can to achieve those goals as quickly as possible. Because You just don't know what's going to happen. You get older quicker than you think. Your back hurts, your legs hurt, things start to change, and you just don't have the same energy anymore. I don't mean to preach, um, but I was just thinking about his comment and how much it said to me and how important I think all that stuff is. So really, if there's something that you have as a goal, go out there and do it. See wherever it is, you know, jump, go skydiving if that was something you wanted to do, or swimming with dolphins, or whatever it is. Because the world's pretty cool, and you got a short time to make those decisions. Well, I think I'm coming near an end. I'm not going to start editing yet, so if I got more to say, there'll be more after this. But before you go, before I forget, if you haven't already and you've made it this far, do me a favor and hit that subscribe button. Take a moment and smash the like button. Not only do I appreciate it, helps YouTube's algorithm, helps to grow the channel, helps people find it, and it goes a really long way. So, like I said, maybe I'll come back and have more to say, but at least for now, I've rambled enough for you guys.